Good morning, traders. It seems like I need to hire like a sound engineer or something. First thing I need from you is a sound check. This is episode number 2241. It is 8:05 a.m. Chicago time. We're starting 5 minutes late. On on Thursday, May 26, 2022. One second. And here we are again this morning. I don't know if I said this, but derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Yeah, it's incredible dealing with these sound issues. I've turned down the sound. Just now. Let me take a look at the levels. Should be okay at this point, right? Give me another check, please. Let's dig into the CT pre-market summary sheet. Mild risk on this morning. A cheap mic. No, it's a $200 mic. Yeah, this is a Rode mic. Mild risk on this morning. We're seeing the lead from the Dow Jones. We're seeing retail taking a little bit of a pop, retail outperforming. We got some numbers this morning. We've got some numbers this morning out of Macy's, Dollar General, and a few others. Numbers yesterday afternoon also beat. U.S. GDP came out this morning. The overall GDP growth rate Q on Q, the second estimate on Q1 is negative 1.5, slightly worse than negative 1.4. The deflator came in slightly hotter. The U.S. GDP deflator prelim Q1 8.1% versus 8.0 expected. And that's where we stand here. Overall, that with continued expectations for the Fed to slow down tightening. If you look at the Fed funds rate out in December and later in the year, the probabilities currently being estimated in the futures for the Fed fund futures are softening. This, as I said yesterday, is very, very likely to cause a bounce overall in the U.S. And across the globe. That's what we're seeing. At the same time, we're seeing that China is softening their stance a little bit on the zero tolerance COVID policy, where they get one new case and they'll shut down an entire city. Which to me, of course, I can say this because I don't live there. And it's not my government, is absolutely absurd. So it's just that is likely to help ease the supply issues. I think China has painted itself into a corner and is likely to see some movement away from manufacturing there into other areas, Indonesia, Philippines, or domestic. This morning, we're looking for U.S. pending home sales year on year, expecting negative 10%, month on month, expecting negative 0.8%. So that's where that stands. My inventory looks pretty low. I don't know why you're saying that. Looks to me like 32% above the line, above yesterday's settlement. Yeah, it does look a little bit low. I'll have to look into that. There's a computation that does that. I'll have to look into that. There is quite a bit of volume above the settlement there. Crypto is taking a bit of a hit this morning yet again, with Ether really pushing quite a bit lower. And as far as earnings this morning, we got Alibaba, which actually held up much better than expected given what's going on in China. Royal Bank of Canada, Dollar General, Medtronic, and TD Bank, as well as Broadcom, Macy's, Baidu, and VMware. Those are the heavy hitters. After the close, we're looking for Costco and Dell with Marvell Tech. on view of the S&P, we have 239,000 contracts traded, 32%, which I don't believe is correct. It looks to me like more like 80 or 70%. Inventory is positive. I need to check what's going on there. The range is 49.25 points, already quite wide versus the one standard deviation of the overnight range. And the point of control, 39.97 underneath a key 4,000 figure. That's where we are. We have a multi-distribution, pretty boxy profile so far. Let's take a look. Let's jump into our review segment here and look at what we did yesterday. Yesterday we had an open auction. Let's clean up the noise here. We had a very brief open auction. So if I scroll back, this is a one tick by 8. We had a very brief open auction, a really clean test down to 39.2150, a clean test up to 39.3250, and back to the mid. And then from there we launched higher. Remember yesterday I talked about the very, very high expectation that we are likely to respond, to have a responsive buying spree higher yesterday. But I did expect the primary scenario yesterday. If you watched, the primary scenario was expected to be a push down into 39.13 and a basing before the FOMC. The overall picture, though, that I painted yesterday was what? What was the key thing you took away from yesterday in terms of targets above and the direction of travel? What did you guys remember from yesterday? It accomplished some of it yesterday, but as we push forward here and we walk forward, you can see it pushed to 39.76 or so. And then it pulled back to the middle and held the middle until the FOMC was right here. Very big drop, another V bottom, and then it started to really grind up and travel higher. I managed to trade that FOMC, and I think I posted a trade in the Convergence Trading Head Trader channel where I think I took a short at 06. Miraculously, I caught this move right here all the way down to the bottom there. I think my last exit was 29.50 is what I posted. Screenshot of my fills from Edge Pro X. So from there, it walks itself right back. I found this to be difficult to read. We build a box right here. We break the box and we create this opportunity right here for a long. We are now above the open, above the prior day's high. We've taken out the prior day's high, which is a strong indication, given that we had a lower high, lower low the prior session. So this is a reversal of one-time framing. That's an important piece. We're above mid, we're above VWAP, and so we're looking to the long side once that happens. And then the next trade I found was the next trade that's set up is a box structure right here against the IB high. And then it just impulses through and gives us a small pullback for a long into the 39.8950, which was the high from a few days ago, from Monday. That was the target there. That was that trade was a 10-point scale and about a 15-point top there, or BSO. And we finished at near the high of the range. Normal variation day, Delta rising on the close. Delta was pretty lazy throughout the session, and the rotations were quite even yesterday between buyers and sellers. In this area, we see a lot of two-way action. The tape is quite noisy in the morning. We're seeing nice little setups that end up coming back right away. That's what I noticed. I see good bursts or impulse trades, trade the pullback, and then get a scale out and then get a stop out. I'm seeing a lot of that. I've been seeing a lot of that for the last few days. This is incorrect. I really need to update my IRT to version 15. We reopen, we go sideways, we push to the upper distribution here, almost to the middle of the upper distribution, come right back to where we opened. We form a base. Look at this. This is so typical. Let me zoom in here. This is exactly what I was just talking about. Very annoying kind of behavior that we see here. Right there. This is quite brutal. So you have another impulse here, and the pullback comes right back, in this case, to mid. So we have a pretty decent reference here. But it really comes back. These impulses are coming back like 90% of the way. This impulse here comes all the way back. It's almost acting like it's a scene of the crime. This is kind of behavior that we would see on a news event, and we would trade back into the news-based price. So very odd. But I'm also seeing a lot of buying pressure coming in. There are icebergs on the bid that cause the delta to be negative, but actually the iceberg is filling a large order for a long position, or liquidating a short. In either case, whatever participant has that iceberg is taking the position that they're expecting prices their exits, saying that they are expecting prices to stall to the downside or whatever. So the delta can be misleading when you have so much in terms of icebergs and kind of these hidden orders and things like that. It becomes harder to read the order flow. Speaking of order flow, for just a second, today, actually, this is incorrect. It is at 1 p.m. Today at 1 p.m., I'm hosting a public event for Convergent Trading. I'm going to take, in this event, for those of you who've been listening a while, you want to register for this. You can see the URL at the bottom. Go to ct.pro/live-trading-webinar. Okay, so this is an anatomy of a trade. Unfortunately, it's taking place at 12 Central, 1 Eastern, kind of the quiet time. But the goal for this event is to take today's pre-market setup, what I'm doing here in a Trader Bite, going over what the market narrative is and what the plan is, and walking through and looking at the trades that set up this morning, if any do, and what is setting up going forward, including the use of order flow to locate entries and so on. A trade might set up. I'm going to take it. I'm going to set myself up in a way on a live account in a way that I would expect you to trade it. In other words, using micro contracts, using 3 lots with a preset strategy, exit strategy, and so on. We'll go over that in today's webinar if something sets up. If you want to register for this, you need to point your browser to go to ct.pro/live-trading-webinar. Okay, so here we are. Let's take a look at where we are in the big picture. So the big picture is that we have been traveling downwards. So we had this month here that has pushed higher, right? March pushed higher, and it kind of put us into a neutral stance. April, the black boxes, April is right here. April high and low right there. April pushed lower. May so far is pushing lower. We've had one-time framing sort of on the weekly. We've had one-time framing since 45.09. We've had one-time framing down until we broke the 40.89.75 last week on that strong bounce, which we talked about that morning before it happened. And we're currently trading inside of last week's range. I showed on Edge Pro X a chart. I showed a chart on Edge Pro X where let me pull that up, where we talk about how we are right in the middle of the prior week's range, where we had a wide-ranging week and we're right in the middle of it. And in my opinion, this is why there's so much chop here. We are in between 2 key segments here. We are up against this little nubbin here. If you do a profile, if you look at the micro composite of this area that has chopped around, the number we are after is 40.15. This is what I talked about yesterday, which you guys had mentioned. As an answer, and overall, you're right. 40.15 is where we're going today, where we're headed today. We attempted to push there. I think the high in the overnight session is 4,975. But if you look at this chart here, we talked about this being last week's high and low, and where we are. We are remaining positive against last week's close. So we are pushing directionally here in what is kind of a trend higher. We're looking for this 15. This is the key test area. We're pretty much there. But we're remaining inside of last week's range. So back to the composite, don't forget to look out and see what the big picture is. We remain well below the big moving average. The market remains bearish, but we're in this kind of a slumpy area in here, and it's likely to continue to be choppy. Okay, the market's anticipating maybe some easing from the Fed, but it's also anticipating that it's very, very likely to see the Fed the taper, combined with the supply chain issues and so on. All of these things combine to traders being, or investors being, cautious. Here we are. We've poked into some of this single prints from last week. We are approaching that 15. We're doing pretty good. We've got a higher low yesterday. We're establishing one-time framing higher. We're establishing one-time framing higher, and it looks like we may come in here today and rest. There's nothing on the calendar, in my opinion, that is likely to drive things unless news comes out, or unless a Fed speaker or somebody comes out and says something. So overall today, the key thing to take away today is to just stay calm. Today, expect it to be relatively slow and grindy and choppy. Not only that, but Monday is a holiday in the United States. We celebrate Memorial Day on Monday, and so tomorrow marks the first official day of summer. This is when swimming pools open in high rises. People put their boats out in the lake here. It'll be a very, very quiet day. Tomorrow we have the personal spending, personal income at 8:30 Eastern. We have a slew of numbers at 8:30 Eastern. Retail inventories, goods trade balance, whole inventories, PCE price index, and so on. And then that's it. It's pretty dead tomorrow. So we're coming into a holiday weekend. Temper your expectations into the long holiday weekend. This weekend, there will not be a trader bite on Monday. It'll be a holiday. So let's take a look at what's expected for today. Again, today at 1 p.m., I'm going to be on talking about the anatomy of a live trade. I'm going to take the narrative that I'm going over now with the plans that I'm laying out, and going over what has happened and what the overall performance is of the plan versus expectations in this webinar. So I'm taking you from the trader bite to actual discussion of how this is executed and how it's turned into trades. I think you could benefit by being there. Here's what's expected for today. Primary scenario for today, given the way we are going, we are having the mid VWAP and the overnight point of control converging against the high of yesterday's range. We are opening right in this area, 39.87, 39.90. I'm expecting an open auction on the extreme. I'm looking at this as rejection. We are almost at the magnet. The magnet's now at 15. That is the key test area above. The over-under line is unmoved from yesterday and remains at 55.56. This was yesterday's key over-under line, and it remains there. So, open auction 15 above. I meant to write 55.56, not 55.60. Open auction, I'm looking at this as a short-term rejection here. We do have a positive delta, not incredibly strong, but I'm looking for this to be responsive selling towards deeper into yesterday's range to find a base. We're looking for it to come back to settlement, hit the settle stat, and then base from there. And I'm looking for this thing to rise to the 40.15, consolidate, continue up into the 40.33 before it comes back and finishes around the overnight high, around the 40.15. With that being said, and settlement being at 39.76, 39.77 to 40.33, that gives us about 60 to 65 points of range, something like that, well within the daily expected range, So I'm not, if I catch a long in here, I'm not going to just stop at 40.15, the magnet. It is likely to extend a little bit higher. That's the primary scenario. And I'll explain to you later during the webinar how I'm looking to spot an entry and how I'm trading it. The other scenario is an open auction that basically chops around in here and then starts driving to 40.15, and this is likely to push to the mid-century at 40.50 up here. I know that seems like a long way up for a choppy time, but I'm expecting that some of these shorts in the downtrend are likely to liquidate, and the way the market's set up is indisputably resisting lower prices. Remember, we pushed below 38.55 over 100 points ago, and we popped right up. We tried to poke under. We stopped at 38.70 something, and we came right back. We finished strong. That was 2 days ago, and here we are in the 4,000s, and it is likely to continue to get buoyed as the market generally is exhibiting signs of short-term oversold. They're buying dips in retail and other stocks. Some of these stocks have gotten wrecked. And so to me, 40.50 is not a crazy amount. The third scenario, because both the key scenarios are going in the same direction, the third scenario is it pushes to 40.15, finds sellers back to the open, and then I'm looking for it to break and come back to this 55, consolidate it to 55, and then come right back into this the yesterday's prior point of control at 39.45, which is right here, 45, giving us about 70 points of range to the downside and consolidating right there at the mid-century at 39.45. That's scenario 3. So we still have a higher high, higher low. All three cases have a higher high, higher low, quite bullish. But the third scenario is one where it's overdone and the magnet becomes resistance. Okay, this is what I've got for you. Good luck, and I'll catch you at 1 p.m. Central, 1 p.m. Eastern, 12 Central today. Be sure to sign up and to attend live. It'll be broadcast over YouTube as well. Good luck.